Those two are the only fair value gaps that work. I want you traders to pay very close attention in this video, because after that you will not be the same trader as you were before. You will see your trading profits skyrocketing. So welcome to ChrisFX, and let's begin with this video. Here traders, I have two bullish fair value gaps. One is this fair value gap right here, and the second one is this fair value gap right here. And I will explain why both of those are very important, and which one I will show you the third then, which you shouldn't be trading at all. Now, the secret is on how these fair value gaps are being formed. If you just look at it as it is, you will say, Chris, it is just a fair value gap, and this is just a fair value gap, which is created by the gap of this low of this candlestick and the high of this candlestick, and on the left of the low of this candlestick and the high of this candlestick. We have a gap right here. Yes, pay attention now, because this is the bullish example that I'm showing right here. So I have those two valid bullish examples. What I want you to do is to identify a fair value gap, and in this occasion, because we are looking at a bullish fair value gap, and hence when price retraces back we will be willing to buy, I want you to identify, to check out actually the first candlestick. And this is your first candlestick out of the three candlesticks that created the fair value gap. So this is number one, this is number two, and this is number three. Forget about number two and number three and focus on number one. The very same thing I want you to do right here. Focus on number one as you see over here. Okay, what do we see in this occasion? What do we want to see? Here we see a bullish candlestick, another bullish, and a bearish. As I said, I don't care about this third candlestick anyways, and not too much about the second candlestick as well. I want you to identify those fair value gaps whose, let's say, first candlestick leaves a wick above it. In other words, if you take this wick with this tiny wick right here, it is, what is this, guys? It is the so-called king order block, if you recall, something that people are not talking about anymore. So we don't even care about this wick. Down here it happens to have a tiny wick. I want you to identify fair value gaps that have this wick right here. In other words, in this example on the left, if this would have been the case, and let me change the style to green and turn the opacity all the way up. So if this would have been the occasion, let's say, without a single wick on top, you wouldn't be taking this one as a strong fair value gap. You would not be considering this one as a strong fair value gap. So let's go ahead and change that. Okay, so this wouldn't be a strong fair value gap. Now that it does have the wick though, I remove that. This is a very strong fair value gap. Now, if I take you right here to the right, in this occasion, this is extremely strong, because already this one, let's leave this as it is actually over here. This is very strong because there is a fair value gap, and as we said, we are focusing on the first candlestick, which is this candlestick right here. This is now a different occasion because this is a bearish candlestick. It is a bearish candlestick, which at the very same time is an order block, because before it, let's say that we had another push. Let's suppose that we had something like that, and then this candlestick right here, okay, formed. This is also an order block, and above it there is a fair value gap. So those ones, if this one would have been, let me do that like that, and let me change that to a dark color, this one you would still consider a strong fair value gap. because this is a bearish candlestick right before it and it is an order block. This one on the right, you wouldn't consider a strong one if there wouldn't be a wick because it is a bullish candlestick. Okay, so this with a wick is a strong one, and this one, a bearish candlestick followed by a bullish, is absolutely fine, even if it doesn't have a wick above it, this one. Now, regarding entries, because we are not finished. Many times, traders are confused, and I was also confused in the past, and we have this whole fair value gap right here. They don't know where to place the entry. Not everyone has the time to be in front of the charts, as I do have with the hyper scalping team that we are rocking it and passing one account after the other. And if you want to join, go ahead and join us. There is a 30% discount for the lifetime down in the description. And if you want to get an 80% discount for Apex Trader, I have a code, a beautiful code, 80% discount on every single purchase and renewal that you are gonna do for a lifetime. Go ahead and click on that. So the entries right now, because not everybody has the time to check out a lower time frame or whatever for an entry, the entries here are going on top of this wick. The entry is going here, and the stop loss, my lovely guys, is going below candlestick number 1. So forget about searching for the swing low, which might be all the way down, and then placing your stop loss over there. Here we are trying to establish a strong move, which should not penetrate below this one, this first candlestick, because statistically, from my testing, this is a very strong candlestick. The very same way, here your entry would be going on top of this candlestick right here, and the stop loss right below this candlestick over here. And as we said, since for this one we don't really care for this candlestick if it has a wick or not, if it would have been a body until here, no problem, you still take the entry. So now that we have done that, and let's take a beautiful screenshot as we always do, and I will call that SMC Trader because I have not uploaded anything on the other channel, and I will go ahead now and delete that and that, but at the very same time I'm gonna take you to the charts and we're gonna check out some beautiful real examples. I am, by the way, on the 15-minute time frame, but this can work on any single time frame. Okay, remember that. Here we have some very beautiful examples that I have highlighted on the chart. So guys, let's take this current leg that we see over here. It is a bullish movement. There's no question about that. We are breaking above previous highs. Then you are asking yourselves, do we have a fair value gap over here? Nothing to my awareness, to what I can see, at least from what I can see. Do we have a fair value gap right here? Yes, we do. We do have a fair value gap. It is this fair value gap right here. There is a wick above this first candlestick that created the fair value gap. So if I was to take the trade, I would take it right from here. Very good. We move forward and above this area. We break above yet one more time. What is that? What is that exactly right here? Is that area significant? Why is this fair value gap over here very significant? Because it is a bearish candlestick, which is also an order block in the middle of this area, followed by a push and followed by another candlestick, which all of those create this fair value gap. Now, in order for you to eliminate confusion, instead of placing the entry at the top of this one, I want you to go ahead and say, you know what, Chris, I will place the entry on top of this candlestick, or I will wait for price to come right back into this area, and my stop loss is gonna go below this candlestick, the first candlestick that created the fair value gap. Okay, let's leave those two lines as they are, and as a matter of fact, let's extend the lines towards the right. Okay, and let's leave it as it is. Now, if we move forward on this leg after this break, is this one a strong fair value gap? It is one as well because of the wick, and if we combine this wick, let me show you this wick with that, this is our king order block. You see the two wicks. If I remove the fair value gap, there are two wicks, this wick and the top of the wick of this candlestick. So this FVG becomes strong as well. If you would place the trade, it would go exactly right here. Okay. And the stop loss would go below this area. Good. Now, what you can do, you can wait for a reaction, or you can enter on those areas blindly, let's say, with a stop loss, of course, right below the area. This one wouldn't have worked, but let's take a look at this one. Price came back after reacting from this fair value gap once. It reacted one time, exactly right here. Okay, and then it came even deeper, it grabbed more liquidity and tapped not only on the remaining part of the fair value gap, but on top of this first candlestick from the three that created the fair value gap, and I'm referring of course to the top of this candlestick right here. Okay, let's delete those areas. Now the stop loss, we said, should be going right below this area. Exceptional. First profit here. There you go. Let's see for how long this went. Of course, you cannot know that. It went for a 10.8 to 1 RR in total, guys. Isn't that fantastic? Fantastic. Good. Let's go ahead and do that again. And let's move on to the second example. Now here we see a very strong bearish momentum, and if you want to add some form of EMAs or whatever, then go ahead and do it. Now, this fair value gap, let's analyze as an example this fair value gap right here. This is not a strong fair value gap for us to say that we will place an entry over here. Why? This candlestick does not have a wick. And when I'm talking a wick, I'm not referring to a wick such as this tiny one. I mean quite a good wick, a good size wick. Not at all. So this alone is telling you, forget about this fair value gap right here. And also, forget about this fair value gap right here because of the very tiny wick. Nonetheless, the only fair value gap you should care about is this fair value gap over here because candlestick number 1 has a large wick. Okay, let's proceed slowly and see what is happening. Okay. I am very sure here, I'm very sure you would have had a win already. An example that I have not seen. It is another example that I want to show you. So even from this retracement, if your entry would have been here at the bottom of this fair value gap, so your entry is here of the first candlestick, the bottom of this first candlestick and the stop loss on the top of it. Let's see if this would have offered a trade. Oh yes, this is a trade, and it is a trade that went up to a 5 to 1 reward to risk. Oh, fantastic. Let's move a step backwards now and say, since I know, I'm not quite sure, but I suspect from my knowledge that this FVG will not work, and this FVG will not work, let's try to find trades until all the way up there. Okay, good. This is a strong push up, so yes, but this is, I think, what is that, 830. Maybe it is news driven, but anyways, if you were to take a trade, I don't like this one. This is news driven, look, because this candlestick is an inside bar to this candlestick, so forget about this example. Let's move forward. Okay, there you go. This one, we come down, we break back up, we suspect that until here we can get long trades. What do I have here, guys? 1, 2, 3, and number one is this candlestick over here. Okay, number one is this candlestick. Let me do it again. Number one is this candlestick over here. Very good. Does it have a wick on top? Yes, and on its left it also has a beautiful further candlestick. A second thing is a king order block is being created, a tiny wick below candlestick number 2, and this wick create a king order block. This is your fair value gap, and your entry is not going to be randomly inside the fair value gap, but on top of this candlestick with a stop loss right below it. Very nice. Let's extend that to the right. Let's see, guys. There you go. There we go. And let's do it like that. Good. Now your target here can certainly be either this high or over here that you suspect price is gonna go. Oh, look at that. Another win. Isn't that fantastic? And then you're taking this short from all the way up here, guys. So win after win after win, only on the 15-minute time frame, just by identifying this thing. And here you would have had a loss. So over here, that would have been a losing trade. A losing trade, and then a 4-1. Do we have anything more here? Let's see, another losing trade here. Maybe another losing trade here. And then, of course, you can go ahead and monitor all of these things. Here you would have gotten a loss, and here as well. But here, when you would monitor this strong bearish momentum, you wouldn't enter, of course. So you would have avoided this one, and then this we wouldn't take. This we wouldn't take, even though this would have worked. You see? From this fair value gap, the top of this fair value gap, we wouldn't take it because this doesn't have a wick. Nonetheless, you see that even this one, which we will not use in this occasion, if you pay very close attention, this is more than a 10-1, right on the news. This we would take as well, and this we would take as well. So now, instead of going ahead and searching for every single fair value gap and scaling down to a lower time frame and trying to identify what am I doing wrong and all of that stuff, you can go ahead and trade what I showed you right here. And this will work on every single time frame, guys. Yes, many times price is not gonna come back, or maybe it will come back in the future. So here it didn't. It tested this FVG at its middle and it went. Okay. Here maybe you would have had a loss. Okay. But you always need to pay very close attention. Let me show you why. Because after this bullish break, this is another thing that we should show. After this bullish break, yes, you would say, I will place an entry here. As Chris said in this video, I might want to experiment with fake money and place a trade here, right below this fair value gap. right on top of this first candlestick with a stop loss below it. But if I have a very good eye, and if I'm not an impulsive lady or gentleman, then I can see that below this area, what is that? It is a fair value gap. Oh, nice. It is a fair value gap of the 15 minute. Does this candlestick have a wick? Yes, it does. Very nice. So my second trade would be going here. Stop loss right below this area. If I extend those two to the right, this would have been a loss, but this, oh, won't you look at that? There you go. There you go. Fantastic. This went up to a 7.9 to 1 RR, this second one. So expect to have losses as well, guys. You will not win every single trade, but this is a fantastic strategy which is gonna be minimizing your entries. Okay. And of course, I would suggest that you go with a trend. Many times you will not get activated, such as in this occasion that we see right here. Okay. Many times you will not get activated into the trade. You have to check out what you're gonna do in such situations. This is absolutely up to you to make a strategy with the things that I showed you right here. And if you keep following this thing again and again and again, and you are not moaning on every single loss, as many people are doing, okay, people lately are very good moaners because they are losing traders, they cannot get wins because of their bad psychology. Look at that. Oh, if I have, let's say, the courage to get those trades and let them run, I will be in a fantastic shape. Good. You don't even need to do it that small if you want. You can just extend it a little bit. It is up to you. As a take profit, I mean. Very good. So, the opportunities are here. Many opportunities are gonna arise here as well. Very tiny, of course. Tiny wick, but if you would take this one, your entry would have been here, stop loss above the first candlestick. Off you go, guys. A bunch of different examples that you can use. Here this would have worked as well. This top fair value gap with a stop loss. Even though after this huge leg you might not want to enter here. But if you wanna play the numbers game, the stop loss would go above this area. Look at that. Again and again and again and again. So make sure that you go ahead and you try this thing out. You backtest this thing. You will get also false signals. There's no question about that you're gonna be having losers. But this thing works and you can see it on every single occasion. Large wick on this situation. This FVG was created by 3 candlesticks, and the first is a bullish one but with a very large wick. Let me do in this occasion, let me add that one. This is the top, this is the bottom of the candlestick. Okay, instead of placing huge stop losses, price comes back. And okay, if you would have a tight stop loss here, you would have been stopped out. But if you wouldn't, as I said, it is up to you to fix a strategy, and you would say, you know, this is very tiny for me, which is not tiny. I want to extend it a little bit. Okay, if you have a strategy that you add a little bit, this would have been a win. Fantastic things. And of course, price many times will come and retest the smallest fair value gaps that are left behind. It is up to you to find those things, and if you want to learn way more, go ahead and enroll in the academy or in the one-on-one mentoring, where I will teach you my hyper scalping strategy. Hyper scalping does not mean that you cannot apply it. You can apply it in prop firms as well. Since you guys are addicted to prop firms for whatever reason that is, I'm also trading prop firms, of course. I'm a six-figure funded trader, as they want to say it, even though the equity that we are allowed to trade is way 10 times less than six figures, but whatever, let's call it for advertisement purposes. I am a six-figure funded trader, and if you want to join any of the exceptional services, I have huge discounts running, or you can email me or text me on Instagram for any discount. I am always willing to do the best for my clients. Subscribe to this YouTube channel and to my other channel, the SMC Trader. Like the video, share it with all of your trading friends, comment below. I want to hear what you think about those strategies. And this is gonna do it for today, traders. And thank you all for watching. Until next time.